Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good morning, everyone. Ira Epstein of Lynn & Associates with your morning flash update for this Wednesday, March 1st, 2017, about 9:30 a.m. Central Standard Time. We were swamped this morning. A lot of customers placing orders, doing things after the president's speech, which you don't need me to tell you. The market loves what he did. You can hear it on certain press stories. No matter what happens, they're going to hate the man. It was cracking me up watching how in their white, the little ladies, the Democrats were running out as soon as the speech ended. Boy, they make themselves look stupid. In looking at all this right now, you can see you're getting a big rally in the stock market, money coming out of the gold temporarily because the dollar has also gone up on this. At the same time as this is all moving through, the market is starting now to really build in and switching gears that maybe a March 1st rate hike is actually going to happen. The percentages have shot up on the CME Fed Watch page. You're in some instances over 50% now if you take a look at some of the different Bloomberg ones and some of the others. So pay attention because it's all over the board. And what's happening is the economic data keeps getting better. Now we're going to get jobs data coming out, and that's going to be one of those things that we look at. We know that the budget that President Trump is going to throw out is dead before it hits the Hill because the Democrats would hate no matter what it was. It could be all their numbers. If it comes from him, it's dead on the Hill. So when we look at markets, U.S. final February PMI came in at 54.2. The preliminary was 54.3. That's good. Construction spending down a little bit, down 1%. They expected up 0.6. And the interesting part of that is the weather was pretty good. So hard to figure some of that out. They go to revised spending, though, in January, and that was up 0.1 from a negative 0.2 down. So, again, weather's playing a bit of havoc. Now, here's some good data. Manufacturing headings, ISM data, 57.7, they expected 56. Prices holding up strong at 68 versus 69, so it's not creeping up dramatic there. New orders, look at this shoot up to 65. Inventories up a fraction, but you're getting all those orders, why not? Employment index, nice number, 54.2 versus 56, but nothing to worry about there. And the production index at 62.9, so these are good numbers. Personal income up 0.4. What makes our economy go? You make more money, you spend more money. So that's helping, and you can see it all the way through. It seems to look good. Now in Germany, this helps the world markets because their CPI up 0.6 on the month and 2.5% on the year. That's a big number. Their inflation's likely to be 0.5 percentage point higher than originally forecast. Joblessness fell 14,000 compared to the 25,000 in Jan. And the preliminary release said that the yearly inflation at 2.2% last month from January's 1.9. So they're getting the boost they need. Last, the EU PMI, the Purchasing Manager Index for Feb, up to 55.4 from 55.2, and that's the highest since the spring of 2011. So what we know is Mr. Draghi's his program of pumping money in, getting interest rates, unfortunately negative, but because they're negative, people have to do something, and suddenly they're just spending the money, they're investing, and that's helping the market. Now, another thing today we're watching is, there's still those denials out that the blends and who pays for the splashing, as it's called, after there's parts in the refining, the racking, and then the splashing that goes on. I'm getting a whole education in this as I'm asking these questions. And to make a long story short, where there's all this smoke, there's probably something going on. And while we keep hearing from the associations that deal with ethanol that absolutely the White House is preparing something, the White House denies it, who knows where that's all going. The fact that you're up this much today, well, that tells you something at least in the market. Soft market's still weak. We're going to wait and see just how the API, EIA numbers start coming out in the energies and the rig counts, of course, on Friday. And we're still talking really warm weather hitting the nat gas. I'm surprised it's even up a little bit right now. Now, I want to talk to you about More Research Center. Now, let me explain what this is. You get a 2-week trial. You go to their website, and this is what we do, and you're able to see all the March seasonal trades. I don't care if you're a spread trader, a futures trader. Surely, there's a big disclaimer because no matter what you do, at the end of the day, past performance is not a guarantee of future performance. What they do on their computers is they look back, and if a trade's going to be listed by them as a seasonal trade, it has to work at least 80% of the time, actually a little greater number than that. And when it doesn't, it's dropped from their list and new ones are added. So buy on this date, sell on that date. Great. By itself, would I do that? Flat no. They tell you in all their readings no. Use it with a combination of what you're doing with your moving averages, swing lines, stochastics, your other work. And it gives you an idea that at certain times of the year, certain events happen. Do I use it that way? It's exactly how I use it. And I do look at it, and I've been a subscriber of theirs, I think now, 3 decades. So that gives you an idea. Do I ever just trade on that? Never. Maybe at the beginning of my career I did at times when I didn't know too much. I've learned a lot more. But do I check it all the time? Probably not a day goes by that I don't look to see what's coming up, what the seasonal probabilities are. So we all look at it. It's another tool. You're going to get the written spread outlooks. You're going to get all the publications they put out. These are how the trades look. And yes, you can go on and monitor the chart. You can take out the longest ones, just the last 5 years, what's happened, what's the average profit or loss per day if you're into a trade like that. Give us a call. Go to our website. We'll get you all set up for it. Come right up here if you're watching me on YouTube. Just click that on, the form will appear. And on many web pages that we're on, underneath us, you'll see submit, click here. It'll say something, do so, and away it goes. I'm Ira Epstein. I will talk to you all later today with our other videos. It's going to be an interesting day. It's already rock and roll time, as I call it. You have a good